Hello, everyone. This is Matthew Frailey, CEO of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here, and many, many more that are listed that you don't see. Been doing this for over 20 years for individuals like yourself and professional institutions. Okay, so let's get started with this week's analysis. This will be a market update for May 15th, 2023. This is our back-end recording system for the website. So let me go ahead and get this recording for that started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, May 15th newsletter. First off, in case you didn't listen to the weekend newsletter, Steve Nelson will be leaving this week. He'll be gone from Wednesday through Monday. He's going on a mini vacation. All right. As far as the newsletter, it's divided into 5 major sections, same general theme as we always keep. We first discuss the general market, go over the major indexes in a top-down fashion. We'll look at some indicators, bonds, a few major sectors, the dollar, commodities, precious metals, GDX, and of course, trade ideas. All right. For today, the market was up with the S&P up about 0.3%, the triple Q's up 0.7%. But what led was the small caps. IWM was up 1.2%. That's composed of a lot of the banks, especially the regional banks. So banks and financials had a decent day, so that helped the Russell small cap lead. Okay, even though the market indexes were up, overall we're still in a range. We're coiling on some of the indexes. We're forming wedges. A big move is likely to occur very soon. Now, this week, headlines, we have retail sales on Tuesday. Fed speak, we have 14 Fed speakers, including Powell, all week until Friday. So down here, Fed speak, look at all these. So any one of those, should the market, Monday, again, this is from the weekend newsletter, but you can look at Tuesday on, Bull Stack, Barr, Logan, Jefferson. If any one of these say anything, the market doesn't like or likes, that could propel the market to react sharply. So again, be aware of that. Okay, so let's go and get started here. So before we get into the meat of the newsletter, I like to show you guys what we're looking at just short term. So here's a 30-minute view of the triple Qs. You see this potential rising wedge. We had that pullback late last week into Friday. We had a nice low there. We were looking for that, and we've been looking for this move up at least on a wave 5, and then perhaps maybe a nice little pullback after that. Unless we blow through this, that can happen. Especially if the 5th wave extends. It could go out of the top of the wedge here, but right now this is a pattern that we're monitoring. Okay. And on the S&P, you have sort of a coil sideways-like action. Again, I'll get to those below, but let's go ahead and move on. So next, here's an interesting image, and this, Steve sent this to me. Let me move this over so we can see the whole image. Again, this isn't from us. Looks like the source is tier1alpha.com, so giving them credit. But really interesting here. So if you look at this, what they did is since the beginning of 2021, they plotted if you were along the SPY the whole time, where you would be right now, okay? And if you were also long the SPY, but you got out every week for options expiration. Remember, options expiration is the third week of every month, okay? So if you simply sold out the previous Friday, you stayed out that entire options expiration, that is OPEX, that is once a week, and got back in, the market would basically be at new all-time highs. That's pretty incredible. So clearly going forward, obviously options expiration is something you want to be careful of that week anyway. Or if you want to take off, go on a quick holiday, that's a good week to do so. So I thought this was pretty interesting data. Doesn't mean it's always going to hold this correlation, but pretty fascinating stuff. So I thought I would share that again. The source is, from Tier 1 Alpha. So next, let's move back to the general market analysis. So here's the index sector table, what transpired today. Again, you can see the index is up slightly today with the Russell leading, as I stated. The Dow is up the least, S&P up 0.3%. As far as the major sectors, there's 21 of them here. I don't have the regional banks on here, but let me see what they did today. So the regional banks were up over 3% today. The regular bank index was up 2.5%. So that helped propel the Russell. Semiconductors had a good day. Again, overall, decent gains here. Few down sectors, utilities, drugs, healthcare, which are usually defensive names. Currencies, US dollar down about 0.3%. Cryptocurrencies were generally up today. Commodities all to the upside. I don't see one down commodity. So crude oil rebounded 1.5%. Natural gas up 4.8%. Last week I showed that natural gas had a really nice basing formation. So nice follow through there. And copper was even up today, but it's been very weak lately. The ags are all up, coffee especially. Don't tell Starbucks, they'll raise your latte prices. They never lower them though when coffee falls, do they? Precious metals were up, gold and silver slightly, GDX up not quite 1%, and 10-year, 30-year treasury yields were up today, so rates were up. Next, item number 5 shows the economic news calendar. Again, I already discussed kind of what's going on this week, as including the Fed speak. We have 14 Fed speak. I guess we had quite a few today, so not quite 14, but there's basically Fed governors speaking all week, so be aware of that. All right, guys, let's go and jump to the market index charts. So the first chart below, item number 6, this shows a daily snapshot of the 5 key major indexes. Again, since I showed you this a week ago, nothing's changed. The Dow here has been basically going sideways. The Dow led last year, and it's lagging this year. What's been leading this year is the NASDAQ, which was the worst performer last year, so things have flipped. S&P still in this range, quite honestly. Everyone's all worried about missing these big moves, but look, it's went nowhere since February. It's still below resistance. NASDAQ's kind of working on a potential wedge here unless it blows it out. And the Russell held this key support down here, which, like I said before, would be a good place for a stop if you're long. Next, let's move into the S&P 500, which is our proxy. So here's the weekly view of the S&P. Again, I just show you this for the bigger picture. Back in December 2020, January 2021, we called for that bear market, which was the correct call for 2021. Since the October 2021 lows, where price found support off this 200-week moving average roughly, price has kind of been moving up in a choppy fashion. I don't view this as a bull market rally. Again, I could be wrong. I will trade what's in front of me. I will adapt. Okay, I'm not locked into anything. But that's my overall view. So right now, again, we're just uptrending here. One of our targets, and again, you can go back and listen to my newsletters or videos from 6 months ago if you want. I've been sort of targeting this 4,300 area eventually. So if we were to kind of hold up and shop around and work higher this summer, I'm kind of targeting that area up there perhaps. Another thing I would be watching over time is the trend line on the 14 RSI, if that's ever breached to the downside. Okay. But again, this is a weekly chart, guys, so not much going on here. Next. Chart number 8, moving on to the daily chart. So here's the daily chart. A lot of lines on the here. Again, we had this expanded coil, which price essentially ping-ponged over the last month and a half, and it's still roughly in this range. Again, you have support at the 50-day moving average and the lower trend line. You have an open gap here, which is from August of last year. You have these other confluence of trend lines. Next. Chart number 9, here's a zoomed in daily view. Again, you can see that expanded coil where price respected it perfectly. And then right now you got kind of another mini expanded coil within the larger coil, so sort of a fractal. And you can see we're just stuck in this range at the moment. Next. Chart number 10, here's another daily chart, zoomed in view. Kind of a coil here. It's not a real coil. It's more of a coil-like. But you can see energy is building here. Next. Chart 11, here's another chart. This is of SPY ETF. Steve showed this on the weekend where if we were to, again, a couple things, guys. We're either going to bust up through this resistance now, or we could be forming a small little head and shoulders here and get another pullback before maybe the market pushes higher again. So either or. Now, if you're new to technical analysis, you might say to me, well, how is that useful? You're saying it could do this or that. Technical analysis is not about being right, guys. It's about seeing options, seeing areas of inflection point for the market where you can place good risk reward trades, where you can have a fairly tight stop with a large price movement. And so because of this, if this were to play out, the head and shoulder, this would be a particular target area. So you could have a stop around here, and instead if it breaks out, you could have a stop right here. So you could react to whatever direction it breaks. You don't have to know which way it breaks. That's what technical analysis does. It's not a crystal ball, but it gives you areas of inflection that you can make trades from. Okay? Let's move on. Chart 12, here's a 2-hour view, also shows that potential lower high. Again, if we break up through here, then that will be negated, but for now it is a possibility. Next. Chart 13, here's a 60-minute view. Been showing this channel for a while. And here, we're stuck in this supply zone. And drew a little channel here, an uptrend line. So again, we're just in this range. Let's see which way we break out of this. Either we bust up through here, start a decent rally, or we pull back again. Next. Chart 14, here's a chart of UPRO. That's the triple long ETF for SPY. Again, it's the same pattern, coil-like. If this does break out, so here's an example. If it breaks over this trend line, you want to go long. Here's some stop suggestions, okay? Like such as below these confluence and moving averages, or this little slight higher low, or even this last, major higher low. So those are areas for potential stops if you go long. Next. Chart 15, here's a 30-minute chart. Again, we had that little double bottom there late last week on Friday. Again, right now we're just otherwise in a range. Here's a downtrend resistance line to monitor. Next. Chart 16, here's a 15-minute view. Again, we had on Friday, price rallied off this demand zone, and then this is your supply zone. Next. Chart 17, here's a 10-minute view. Today, by the way, we hit a perfect symmetry target here. So taking this measurement to the morning high, you add it to that morning low pullback today, perfectly tagged that little intraday high. Next, here's a 5-minute view showing the action from Friday and today. Okay. Again, I want to use this as an education. Steve discussed this on the week, and I posted this in real time last week on our trading community on Breakpoint Trade's website. So if you look at YouTube, there's a lot of videos about demand zones and supply zones now, but they're very effective. So demand zone is something that is not a horizontal line, a set price. It's more of a zone, okay? And so last Friday, I was showing this demand zone right in here. And then as you know, on Friday, market was sold off a good part of the day until it bounced in the afternoon, but it came down into this demand zone. It bounced first off the demand zone, had a 13-point bounce, then sold off again, got a little lower into the demand zone, but held it, essentially a double bottom. Then it rallied, broke out, and then what you do is you take that largest intraday rally, which was 13 points, and so you use that as a marker. I don't wait for that to go long. I go long down here in the demand zone. But after price broke symmetry, I would then add to my long position, and that was a heck of a trade into the close. So great example of buying into support and then using a symmetry break to further confirm that move. Otherwise, today you can see the action. Oh, by the way, here's another education. So today, if you draw the fib retracements from Friday's lows to the morning highs, notice price rallied almost exactly off the 61.8 fib today. That was another exceedingly low risk trade right here, guys, with a stop right there. I have found over the years that the 61.8 fib, I call it the master fib. Again, master P, master fib, kind of sounds like a rap name. Very powerful. In fact, I could make a good living if I just only traded reactions off the 61.8 fib. I find the markets, stocks, everything reacts very well to that fib. Anyway, it was a great intraday example of a long right there. Next, chart number 19, here's the daily KISS trend system. Again, no changes, guys. Remember, the KISS system's been long since March. It's got a trailing stop of around 40.42 on the S&P cash. Remember, you can check where the trailing stops are for the indexes. 100 plus ETFs, over 500 stocks on our STS tables. Next, chart number 20. Here's the 4 time frames we like to follow. So daily up here again, we did hold that ATR and support cycle. Half day here, we did get a little buy cycle late in the day. Again, otherwise we're just range bound here below the ATR. Same on 130 minute. We did rally off the support cycle on Friday, but we're below the ATR. 78 minute, we bounced off the support cycle. We're above the ATR. So a lot of chop here short term. Next, chart number 21. Here's the triple Qs weekly. Again, I'm just showing the weekly, just showing you where some of these longer term targets could be if we get up to those fibs over time. Next, chart number 22, here's a daily chart. We're still monitoring this potential wedge-like action. This has been a target zone of ours for quite a while. We're up near it now. Again, we're working on some sort of fifth wave, it seems. Fifth wave could end, anytime. It could go well up into here. We'll see where this goes. Next, chart number 23, here's the daily KISS trend system. Again, no changes. Trailing stop, smart trailing stop, still at 308, roughly 50. And it went long back here in March. Next, chart number 24, here's the triple Qs, a Rinko chart. Rinko charts, nice clean charts. Each box size here I have it is 3 points, and I have a parabolic SAR on it. Nice clean chart. And you can see how the Qs in October rallied right off this major support zone. And that was also supported by the volume by price. Look at this was the largest volume bar here. That's where price found support. It then this year it broke through the downtrend line here, and it's now worked up to this horizontal line potential resistance, which I've had drawn in place here for a good 6 months. So we're right here, important area. Next, chart number 25, here's a 2-hour view showing the channel we've been holding. Again, if you're long, could have a stop below this uptrend line. Next, chart number 26, here's the 30-minute chart that I showed, this potential wedge. For a proper wedge, it would make sense to have another push up higher in the 5. Again, we could also, like I said, we could try to draw this in here. Price could do something like this. Or, price could just totally negate this wedge. So we'll see if it rallies further, what it does at that upper trend line area. Next, chart number 27, here's a 60-minute chart, shows you that potential wedge as well. Next, chart number 28, here's the 4 time frames we like to follow. Again, not a lot to say here, guys. One thing to note on the 78-minute, we did have a support cycle late in the day. So we'll see if we get some follow through on that tomorrow or not. Next, chart number 29, IWM small caps. Again, no changes from last week. Like I said, under this scenario, this ABCD, this would allow for potentially another move up over time into this demand zone, say wave E, and then eventually a crater. Again, if one is long, stop right here. Price has no business going back below this trend line, or even maybe right here if you want to keep it a bit tighter. Next, chart number 30, there's the weekly view just showing the action, coiling action. Next, chart number 31, here's the VIX, pretty much a know-nothing day. VIX, little black candle. We're right in the middle of the range still in the Bollinger Bands. Next, chart number 32, here's a daily chart Steve showed on the weekend. A lot of chop. This allows also for another move down into this demand zone if the market has another push higher. Next, showing another chart here. Here's the S&P 500, and right here, this is the equal weighted S&P SPX ratio. So the equal weighted means every stock in the S&P is equal weighted instead of, things like Apple being 8 or 10%, stuff like that. So again, as we know, the rally's been very narrow with a handful of stocks leading, and you can see it here how the equal weighted is just strongly declined since February, and of course, even from the March low when the market rallied to a new high, this is went down. One thing interesting here, notice this is the correlation indicator. So whenever it becomes uncorrelated, it tends to occur near some market flexions, sometimes near a high, sometimes near a low, like these last couple times. So remains to be seen what is going to happen now. We have an uncorrelation here, so does that mean we're going to have a big breakout here or a breakdown? And it does say that energy is building, and we're going to have a fairly large move here pretty soon, so be aware of that. Be on your toes. Next. Chart 34, here's the PMO system. Just want to follow up on that. This did go on a buy signal last Thursday, but so far price has just moved sideways. Next. Moving on to look at a few sectors. Here's the technology sector, XLK again. Very similar to the triple Qs, just working on this wedge. Remember, 3 stocks make up over 50% of this sucker. Next. Chart 36, semiconductors, SOX, finally breaking through a resistance trend line here, closing just slightly above its 50-day moving average. That's a positive. Next. Chart 37, biotech. I mentioned over a couple weeks ago that this looks like a bull flag. They don't have it drawn in here, but I had a trend line here. It's got erased for some reason, but it looked like a bull flag. Nice rally, and then since then it's been finding support at its 9 EMA. Next, chart 38, financials. Back tested a trend line last week. Slight update today again. It's still got a lot of moving average resistance here to clear. Next, chart 39, here's the banks. Again, since February, quite the drubbing from 116 down to, $70. Here, Steve shows a potential 5-wave decline. We don't have a new low there to confirm that 5 though, but it is something to monitor. Watch the 9 EMA. A close above that would be a positive. There is a MACD divergence here building. Next, chart 40, here's a daily view, or this is the KRE regional banks. So nice update here from the Doji, closing right at the 9 EMA. Again, we need to see a close above that. We do have MACD divergence here. Next, chart 41, there's a 60-minute chart. Notice the comments here. We talked about this pattern, this H pattern, but we told you guys last week to be careful pressing shorts because of, you could get FDIC changes, short selling bans, other things, and you could see a nice rally from that. Next, chart 42, KRE monthly chart. Again, we bounced off that monthly logarithmic trend line so far this month. Found some support there. Next, chart 43, transports, trying to hold this 200-day moving average. Otherwise, here's the pattern to monitor. Next, chart 44, industrials, forming a coil here. A lot of things are starting to form these coils, guys. Energy is building. Chart 45, materials, also forming a potentially big coil here. Did bounce off its 200-day moving average recently. Next, chart 46, retail, one to watch. Still holding this area. It's been weaker than the others, but it's still otherwise in this pattern, coil pattern. It could bust either way. Next, chart 47, real estate. Keep an eye on this. Been going sideways lately, but I'm kind of wondering if it's going to break down maybe. Next, chart 48, home builders. And very strong sector, still holding this pattern for now. Next, chart 49, XLE energy. It's been weaker lately, still kind of hanging around here. Next, Chart 50, here's the bullish percent energy index. So this gave a sell signal back in April, and it has now fallen to 30%. So it's not really oversold, but it's getting down to areas where it's not overbought like it was. So something to watch here. These moving averages here, kind of a guide. When it crosses these, the 9 and 20 are general buy and sell signals. They're not going to catch the tops and bottoms, but overall catch kind of the trend. Remember, guys, if you want access to these indicators, if you're a subscriber to Breakpoint Trades, we provide the live URLs in our newsletters. So that's a benefit to having a membership. Next, chart 51, here's a clean Renko chart of the BPDR with the parabolic SAR. Nice clean chart. Next, chart 52, ExxonMobil. So ExxonMobil is down at its 200-day moving average. All right. Again, is it going to hold it again? Is it not? But, it could be a low risk area to try a long, with a tight stop if you want to be long ExxonMobil. And again, that's an example of technical analysis, guys. We don't know if ExxonMobil is going to rally hard here or if it's going to break down. But you could take a trade here either way. You could be a low long with a tight stop or short if it breaks down. All right. Let's clear that out. Next, chart 53. The Chinese market's been moving up here. Here's the triple ETF. Nice pop today. Steve's been on this. Closing right at the trend line resistance. Next, chart 54. KWeb. If you don't need the leverage, and again, sometimes it's good not to have all these leveraged funds that move big percentage. This had a nice move today. Good volume. Closed right at its 200-day moving average. I bought a little bit of this. Needs to clear this downtrend line next and 200-day moving average, but nice move. So keep an eye on the Chinese markets. Next, moving on to commodities, chart 45, DBC. Again, slight update today, but overall just still in the longer pattern here. No changes from that. Next, chart 56, there's the daily. Again, just a lot of chop in this pattern. No breakout, no breakdown. Next, chart 57, crude oil, slight bounce today, but again, it's just noise. And this year, the 200-day moving average, when that was lost, what was lost last year, has been resistance. Next, chart 58, here's that OPEX that I discussed. Let me move on. Slide got out of order. Next, chart 59, natural gas. I've been talking about this basing. I talked about this last week. Nice update today, up 4.8%. I like this base forming. Again, natural gas can be very frustrating to trade, unless you were short last year. But this area in here looks interesting for potential long, especially if it breaks out of this. Notice your moving averages are pinched together. You could see it on the ribbon. ETFs are UNG and Boyle. Next, chart 60, copper. Again, perfect rejection of that 61.8 fib early in the year. Remember I talked about that as far as the master fib. Next, chart 61, there's the daily down at the lower trend line channel. Next, chart 62, DBA. Up 1.25%. This is doing better than the overall DBC index. Next, chart 63. Here's DBA on the daily. Held that trend line, popping up. Remember, this is commodities. Moving on. Chart 64. TNX 10-year Treasury yield. Overall, still in this little channel pattern. Next, chart 65. There's the 10-year daily. So in the larger channel, you have a coil forming, so energy's building there as well. Next, chart 66, there's the TLT 20-year bonds weekly chart. Energy's building here too. Notice the moving average ribbon pinch. Next, chart 67, here's the daily TLT, also triangle, descending triangle within the daily. Next, chart 68, high yield corporate bonds. This moves with the general market. So far just chopping around here. A bit weaker. You want to see this strengthen if the market's going to pop again. So far it hasn't. Next, Trevor 69 Bitcoin. Again, broke that little tight coil last week. Little bounce today. Next, chart 70 BITF. Little Bitcoin stock up today in this potential wedge. Next, chart 71 US dollar. Held that demand zone last week, and of course, over the last few months, broke the downtrend line last week. Little pullback today. That's your support now. Next, Jabber 72 UUP US dollar ETF. Slight pullback today after last week's breakout of that little coil. Next, Jabber 73, the euro pulled right back to its 50-day moving average. Let's see if that acts as support now or not. Next, Jabber 74 gold. This is the weekly larger pattern. Again, I'm super bullish on gold, guys, but to me, it just thinks it needs some sort of consolidation here, which fits with seasonality. And then we get our big breakout later in the summer. We'll see if that ends up playing out or not. Next, Jabber 75. Here's a daily view showing a potential coil, or a potential wedge with MACD divergence. Next, Jabber 76. There's another version of gold in this channel. Next, Jabber 77 silver broke down from this pattern last week, finding some initial logical support off its 50-day moving average here. Next, Jabber 78 GDX. Again, it's been holding this 33 support. Remember, this has been an important area. It's been resistance a couple times, been support now a couple times. Okay, can GDX pop to a new high, or is it just consolidating here? I would at least like it to test its 50-day moving average. Next, Jabber 79. Here's another daily view. Again, you could have a swing stop, still be long right there. Is it forming an ABC pattern, which I think it is, but I'm not sure if it's done. I still would like to see it test its 50-day moving average here. Next, Jabber 80. Here's a 2-hour view. Broke that channel or that trend line last week. Next, Jabber 81. Here's a 60-minute chart. Again, for a long, it really needs to break out of this channel. But overall, I would like to see more correction in this area. Next, Jabber 82, Newmont. This is one to watch. I know they're trying to acquire someone. They're, I think, the largest gold stock company now. Watch this ratio as well. This is down here near the 200-day moving average, so it may be one that's not too bad to own a little bit of it, even if I'm waiting for GDX to go through some more consolidation. All right, guys, finally, let's move on with trade ideas. We've had some nice ones. Today, the star was AI. Everyone's been playing with ChatGPT and Microsoft's Bing and etc. But huge pop today, up 23.5%. Look at that candle. I talked about going long over a week ago at the 200-day moving average. Was a good area to go long with just a stop, and gave it some room. Luckily, finally, a big pop here. Next, Jabber 84 STNE. This has been a long idea for a few weeks now. My initial target's been the 15 area. It was up 2% today. It's getting close. It's 14.10. The long trigger was down around 12, so it's been a nice percentage move. I like the base here that it's popping out of. Next, Jabber 85 edit was a long idea. Was an absolute textbook bull pennant that we had a few weeks back. Busted out of here, hit its target. Again, if you're still long some though, use this higher low now as a stop. Next, Jabber 86 IONQ was a long idea Steve posted today, popping out of this trend line. Next, Jabber 87 McDonald's. This is a long idea of ours back in March off this trend line break. And we've been raising stops since. If anyone's still long, to me, this is where your stop should be. Should not go below this. If it goes below here, in fact, it could be a short. Next, Jabber 88 KB Homes. The home builders have been strong. Again, this was a long idea of ours back in April. Just trail those stops up. My suggestion would be trail the stops up a little below the 9 EMA here. Next, Jabber 89 AMD was a long idea of mine early last week. Had a nice pop out of the trend line here. Next, Charber 90, UXIN was a long idea of mine early last week. $1.20 was resistance. Popped up to the 50-day moving average here. That's why we have these moving averages on here, guys. It's pulling back, but look at the volume. It's a very light pullback here. Almost nothing. I am looking to rebuy this puppy. I do think eventually we'll try to target this 215, 220 area. Next. Charber 81, Halo. One I'm watching here, it's trying to flag off the 50 or 20 and 9 EMA. Next. Charber 92, XMTR, one from last week. I'm also watching to see if this can form a flag here on the pullback. Next. Charber 93, Omar, one from last week that never triggered. Still monitoring this channel. Next. Charber 94, ROIV was a long idea of ours a couple weeks ago. Off this little downtrend line, popped up. Didn't make it to my $10 target area. It's pulled back. If you're still long, I think a stop could go right at today's lows now. Let's see if it can try to work higher. Next. Charber 95, CRM was a long idea from last week. Still holding above resistance. Next. Charber 96, here's a new one. NEWR, nice pop today, right at this resistance. Target areas would be up at 81 and up at 83. Initial stop for a swing would be right there, that higher low. Next, Charber 97, Cano Health. I've been basing here. I drew this as a logarithmic chart so you can see the trend line better over this 141 area. Next. Charber 98, DVAX, potential long if it can break through here. I posted this today, intraday in the trading community, broke out, but we'll see if it follows through. Next, Charber 99, RPay, nice breakout today. Let's see if we can get some momentum follow through tomorrow over today's highs. If you do trigger, you could have a fairly tight stop in the middle of that candle range. Next, Charber 100, ALGS. Little low price stock, nice volume today, little resistance here to monitor. All right, guys, let's see what happens tomorrow. Futures, quick check on futures. Futures are down about 6 points on ES. We'll see where they open tomorrow. Have a wonderful evening. Take care.